Hey guys, today we are going to analyze the stock of Indian Oil Corporation, short form IOC, and the last price was at 112 rupees. As you can see, the stock price fell about -2%, which is not good, but we are going to analyze the stock for a long term. So, as you know, the brand name is Indian Oil, and it's a very famous brand. It's a large cap company, and it is in oil and gas refining and marketing. So it's a very famous company, you must have heard, and it sells petroleum. There's like several petrol pumps and stuff, and yeah, so let's look at the stock. In 1 week the returns were -2%, and in 1 month the returns were around 3.7%. Let's look at 5 years because that's very important. Not a very good growth, as you can see. I will suggest to hold for in a year the returns are good. 27% is good, in my opinion. And as you can see, if you invested 6,000 monthly in the stock, the value would be 5,000, which is not good. For like if you're holding for a long time, it's not good, and I will not suggest you to hold for more than a year, because the stock right now is let's go to the screen. This is tradingview.com, and we can just analyze, we can draw stuff in the stock, and as you can see, the initial price was at 34 rupees. So obviously the stock price has obviously gone up to 112 rupees, which is not a lot, but still in 25 years obviously it's oil company, so the stock won't go to like 2000. It's not technology stock. So if you are looking in the high growth stock, you must I will make a separate video on Infosys and Wipro and stuff, because those stock price just goes up and up. So yeah, right now the highest price was at around 229. Let's take it as 231, and right now let's see, around this year in 2021, it started at 91, and right now the price is obviously at 112. So right now there's a very bearish move in the stock. As you can see, the stock was going up. Let me draw something. Yeah, the stock was going up, as you can see. It was trying to as the lockdown and stuff was resuming, the people were started, as you can see, that the COVID has affected, because in lockdown nobody was consuming petrol. Now I think the lockdown is starting. Now people are like going more out and stuff, so I think the price will be changing. And let's look at the financial statement of the company, so we are going to get a more good look. So as you can see, last year in 2020, it's a very high number, was at 4,88,000. This figure is in crores, so it's a very high number. As you can see, 454, very stable. They're in as you can see, income statement lower than industry revenue growth. So their peers are obviously the Reliance Industry, Bharat Petroleum, and other. We are going to look at their stock also. And as you can see, over the 5-year, revenue has grown at yearly a rate of 1% versus the industry average, which was at 4.3%, which is not good. And decreasing market share over the last 5 year, market share decreased from 32% to 27%, so it is not doing good. And as you can see, so in 2012 it was at 4 4 lakh crores and 4 lakh, 4 lakh, 4. Then it went down to 3, then 7, then 8, 3, 4, and 2019, I think the highest revenue they ever touched was to 5 lakh crores, and now right now their revenue is only 3 lakh crore, which is not good. And because I think there's like still like 6 months left, and the highest, if the lockdown and stuff gets lightened, I think the revenue can touch to 5,000 crore, which is not a big deal, because last year their revenue was like very close to 5 lakh crores, and right now it is at 3.6 lakh crores. And let's look at their net income. This is so their revenue, so this is not their actual income. Their actual income is at right now, this year their revenue was at 21,638 crores. Good. Last year it was at minus. I think it is because the all the petroleums were I think the petroleums because obviously because of the lockdown, nobody was using that much of petrol and stuff. So as you can see, in 2019 the revenue the net income is like everything after all the taxes and stuff. Net income is that, and 22,000 their highest. I think 22,000 was the highest revenue they ever gotten, yeah, in 2018. So you can see from the balance sheet, you can see 2000 and 2018 and 19 was a good year for them. Obviously because of the COVID again the revenue has went down, but I think next year or so, I think the revenue will touch easily to 30,000 crores with net income. So yeah, let's look at their cash flow. So if you don't know what cash flow is, a cash flow statement is a report of the company's cash management, which summarizes all cash flow inflow of the company. So all the cash they are getting, and as well as the cash outflow they're spending, the cash they are spending and the cash they are getting. So this is the cash flow. So free cash flow is like everything after the expenses and stuff. As you can see, the operating activity, the cash for operating, because they have to buy petrol and then they sell. So the operating and their investment activities. I think the land and the land and stuff, the lease and all. Financial activities, I think they have to pay their lawyers and stuff. I don't know. Net cash. Let's look at net cash. Okay, so I think in the whole cash flow statement, you should look at the free cash flow. Obviously, we are not going to look at all the operating activities, which will take a lot of time. I want to make this video short and easy to understand. So free cash flow is like the cash that company has right now. As you can see, the cash the company has right now is at minus 2,000, around minus 3,000 crores, which is from last year. Okay, so this was of 2020. So they had, so it looks like they haven't obviously there are still 6 months left. So this is their last year. Their revenue, their net, their free cash flow last year was around 3,000 crores, which is not good. Around in 2019, when there was no pandemic and stuff, so then their cash flow was 2,400. This is in plus, and obviously the highest was at in 2017. Their highest net cash flow was the highest free cash flow was 22,000 crores. Okay, so now we are going to look at their holdings. Which people are holding, who are holding like mutual funds, and like who is holding the companies. So as you can see, the top promoters, the actual owner of the company, owns 51% of the company. Now we are going to see. they haven't sold their share, which is very nice. And mutual fund is holding around 4.6%. Now we are going to see if they have decreased. As you can see, they have decreased significant amount. In 2019, they were roughly holding 6.4% of the company, and obviously because the revenue and everything went down, as you can see, now it is at 4.6. Not good, not good, because I always look at what the mutual fund people are, because they study the stock so much. So I think that. And let's look at foreign institutions, sorry. And as you can see, even their holding is went down, and from 7 in December of 2019, their holding was 7.64%. Right now it is at 5.81%. Not good, obviously, because again, because of the pandemic and stuff, the company didn't do that well. Now we are going to compare this with their other competitor, which is Reliance Industries and Bharat Petroleum Corporation. Okay, so as you can see, this is we are comparing this 3 stocks in 1 year, from June 24 to June 18. As you can see, obviously the Reliance has shown significant improve, and as you can see, the charts are quite similar. As you can see, the charts are quite similar, and when Reliance was going up, all the 3 stocks were going up. So if you are interested, right now the Reliance stock is significantly high, and but even Bharat Petroleum stock is high, and but Indian Corporation IOC stock is bit down, but I think it will recover, because right now again the pandemic stuff is just taking a toll, and obviously the pandemic cases are increasing. People don't want to go out, and thus the consumption for fuel and stuff is way down. Okay, so now let's look at the forecast. This is TickerTape. This is TickerTape, and this is you can, in this TickerTape, like if you don't know what TickerTape is, it is like a money control. You can just see, this is a screener type of thing. It analyzes a stock. It's a pro version, so you can see this basic and this pro features also. Okay, so 85%. So analysts are saying it's a good stock, obviously, because it is very cheap also, and their peers overall, because the lockdown and stuff, the stock is very cheap. So it's a good time to buy, because after 2-3 years, obviously, when the things will start to get normal, people will go out, people will start consuming petrol and stuff at normal rate. So yeah, 33 analysts are saying it's a good buy, and I'm not saying, the analysts are saying. Obviously they are more it is their job, so obviously they will be doing something. And price forecast, right now it is at baseline is 112, and the high, which is 50, the high forecast for next year is at 174, which is 55%. It's a good, it's a very nice, and the low is very low. That's why high return expectation. So they are expecting a very high returns, because you can see in 2017 the stock price was at 205 rupees, and right now in 2020 the stock went so low that it was like the company's lowest low. So it was at only 85. The stock is recovering, as you can see, from 85 to 112. So analysts are the more 33 analysts, not me, 33 analysts from TickerTape or something. They are suggesting that obviously the stock will go up and the stock will, improve. And this is the revenue forecast. Right now you can see in 2019 when COVID was not there, when there was no pandemic and stuff, you can see their revenue was very high. And because of the lockdown, even in lockdown, their revenue was obviously comparing to 19 it was less, but it was not in minus. So yeah, in 2021 I think like there's like still 6 months left. So the stock can I think it will cover. Right now it is at 3.7, and 3.7, yeah. Next year, as you can see, they're expecting even the low, even like the lowest low, the revenue will be like plus 7.53. Their medium will be at 40%, and their high, the highest high will go at 111%, which is very nice. These are the things which you want to see in a good stock. If you're buying this stock for a long time, I will suggest you. And yeah, earning per share, as you can see, in 2020 it went in minus stock significantly, which is like from minus to 23. It's like very nice, and it went to 23. Share per value, expected earning growth of minus 34% for next year is less than 3 year of CGR earning growth of 0.23%. So as you can see that right now the earning per share is at 23.57. Next year it is projected that it will go down. 63% is saying that the stock will go down, and the share per share. This means there will be a lot of buying, and less. There will be a lot of buying and selling. So yeah. Okay. So I think that's it, and let's look at the chart one more time, and let's predict. Let's because as you can see, this is 2019. The stock was at 170 something, and it went low as 85, and now as you can see the stock will recover, obviously, because as you can see the stock is recovering. As you can see, in 2020 it was 85, and in this year the stock price has shown a significant returns also. So in my opinion, and I'm not a expert or anything, in my opinion I think the next year the stock will go up, because as you can see it is recovering, and 83% people are suggesting that it will go up. Analysts and they are saying the stock will do good, and yeah, that's it. And I hope you find this video helpful, and if you want to know more or something, you can comment down below. And yeah, thank you for watching, and subscribe if you like.